Good afternoon and good evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will continue our work using the indicator time series volume TVS. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA to make the algorithm development as easy as possible. In the last session, I had explained to you how to get around these instrument subscription where the Euro USD is being used as the instrument of choice. Afterwards, this position amount was defined at zero to make sure there is no existing or pending order in the system prior to the placement of the new order. This TVS indicator blocks of the candle period 15 minutes with the varying time period have been not time period but the varying shift values have been added to define the conditions for the execution of the trade. And to look at the price volatility, we are also taking the help of these get historical candle blocks. And on the lower side, I had created these two variables using the candle difference to figure out the price volatility. Now I will give you a brief refresher of what the logic is for the execution of the trade. The Euro USD chart on the hourly time frame where I have plotted the TVS on the lower side, and we are going with the default values of the TVS. No changes being done. And let me check what is the default setup value here. The time period is 18 here, so I will change the value to the 18 on the plotted data as well. All right, so here we have it. And as I had given you a sort of idea of how we are going to proceed about defining the conditions for the execution of the trade, we are trying to make sure that we will be getting into the trade when there has been significant move on the buy side or on the sell side. That is, the momentum has been strongly bullish or bearish in the recent hours, and after that it has stalled on the higher or on the lower side. And once it stalls and gives us the possibility of a turnaround, we will be looking to initiate the new trade. So for this session, the focus is on completing the buy side of the equation. So for that, we will be considering the data of the TVS over last 1 hour. We will take into account the last 15 minutes candle output of the TVS and compare it to the TVS output an hour back, and there it should have started to decline. No, not started to decline. The decline condition will be for the sale. For the buy trade, we will need the rise to have started. So whenever we see that the TVS value after having been in the negative territory, if it has started to rise and there has been significant move prior to that, we will look to initiate the trade. So the TVS value for the last 15-minute candle should be more than the TVS output value of the 15-minute candle 1 hour back. So that is the look back period of 5, and it should be on the rise. But at the same time, the price action shouldn't have changed much, and rather it should have continued in its prior trajectory. So for that, we will consider the price action data. We will see the difference between the closing value of the last 15-minute candle and the 15-minute candle which closed an hour back with the look back period of 5 should be still in the negative. The closing value for the last 15-minute candle should be lower compared to the prior candle, and that will indicate the divergence taking place. And then whatever is the difference between these two closing values over 1 hour, we will take that into account, and to make sure that there has been substantial move prior to that, we will go back in time. We will take into account the 15-minute data and compare it to the hourly data over last 6 hours. So for that, we had added these hourly blocks in place, and here we will compare the difference between the closing value of candle 20 and candle 21, and it should be at least more than 8 times of the difference between the closing values of the candle 18 and candle 19. All right, so that will ensure that prior to the consolidation over last 1 hour there was substantial move, and it might be now the time to reverse the course for the underlying instrument, and that is when we will be looking to initiate the trade. So here we have this calculation in place, and we will need to look at the difference between the last 15-minute candle, which is candle 18, and the candle which closed with the shift value of 5, that is candle 19. We want the candle 18 candle close to be lower than the candle 18, sorry, the candle 19 candle close. We will have to deduct the candle 18 candle close from candle 19 candle close, and we had done that. So here we have this buy side difference. Now we will compare it to the actual difference between the closing values of the candle 20 and candle 21. So we have to find out the actual difference between these two and then compare it to this closing value. I will multiply this output value with the desired variable of 8 to make sure that we are able to do the comparison right. So here we have this buy side difference, which I will multiply with 8. So this is going to be A1 into A2 okay. Now we compare these two closing values, and for the buy side we will need the candle 20 candle close to be lower than the candle 21 candle close. So we will have to deduct the candle 20 candle close from candle 21 candle close. Okay. So here we take candle 21 candle close and candle 20 candle close. Then it is going to be A1 minus A2. So I have created this new variable. All right. And now we can start defining the conditions for the execution of the trade. I will get in the multiple action block. So we need the trading components. I think it is part of logical component. Yes, it is. So here we have it. And this will be a market order. So the trade will happen instantly whenever the conditions get fulfilled. All right. Now we have to start defining the conditions. We need the TVS values to start rising. So for that we will need the TVS 13 to be greater than TVS 17. This is going to be first input greater than second input. All right. First input greater than second input. Then we compare the price action data. We need the candle 18 candle close to be lower than the candle 19 candle close. So there is going to be first input less than second input, and then we also look at candle 20 and candle 21's closing values. So there is going to be candle 21 candle close to be lower than the candle 21 candle close. First input less than second input, okay, and then as and when the price will start to rise above the last 15-minute candle close, we will go for the execution of the new trade. So all we have to do is compare the 10-second candle values of this candle 23rd and candle 22nd with the closing value of the last 15-minute candle, which is candle 18. So I need two more of these if blocks. Candle 18 candle close will be the common input for both of these blocks, which we compare to candle 22nd and candle 23rd. So this is candle 22nd is the last, no, not last, actually it is second last. Candle 23rd is actually last. We have look back period of 1 here, while in this block it is look back period of 2. So candle 23rd needs to have been higher and candle 22nd needs to have been lower. So first input less than second input, and then we bring in the trade command block, which is open at market. So this will be first input less than second input. All right, first input greater than second input. Let me arrange this on the lower side. We will leave one row empty just in case if we have to add the calculation blocks later on. Now these input parameters have to be defined. Lot amount should be as per the equity in the account. Here I will keep it at 0.1 million. Slippage 5 pips is fine, or you can even cut it down to 2 pips. Since we are dealing with the hourly formation, I think Going with a combination of 25, 50 doesn't seem like a right idea. We will bring down the risk reward ratio to 1 to 1.5, that is 2 is to 3. So for that I will change the stop loss and take profit, and this time we will not create variables. Instead I will define it in terms of pips. So this is going to be 20 pips and take profit of 30 pips. Alright, so here we have defined the input parameters for this trade command block. So the executed by trade will be having these parameters defined for it: when to open, when to close. If the desired criteria are met, the execution will happen. So the logic has been fairly simple to understand and equally easy to execute. I hope you have been able to understand the logical as well as the execution part of this algorithm. And if you have any query or any idea to share, you can write back to me in the feedback section. For further coverage of the market developments, do check out the Dukascopy webinars page as well as the Dukascopy analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need to use the JForex platform. So all these links have been added in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.